What's up, everyone? It's Caddy with Money Vesting. So lots of consolidation for the market. We're pretty much just trading sideways in that range for both the S&P and the Nasdaq. We're not really going anywhere because we're seeing a lot of back and forth between the bulls and the bears. There's a tug of war. There's a battle going on right now at the bear camp at the supply zone that we talked about in our previous videos. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon down below. There is a 16% annual discount available till the end of this month, so 10 more days left if you want to take advantage of that. Get access to all the buy and sell alerts, options alerts, trade ideas, and all the private videos and member benefits as well. So again, link's going to be down below. And we also do have private live streams 3 days a week, so Monday, Wednesday, Friday. I do private live streams with all the members, going over some potential trade setups, trade ideas, and of course answering your question, because that's your time to ask whatever you want. So links are going to be down below. So first things first, talking a little bit about the market. So stocks and Friday session, little change. So we didn't really see a lot of momentum anywhere, right? So higher or lower. And Chris from Chief Investment Officer at Independent Advisor Alliance says, and I quote, "There's the continued push-pull of the fact that the economy has been a lot more resilient than many people expected, and corporate earnings have held up pretty well, all things considered." And even so, he noted that the Federal Reserve has raised rates substantially over the year. Chris said that even if the central banks hike as anticipated as May, it will likely hold rates at a higher level than what the market is expecting. So that discrepancy will eventually resolve itself, right? Either the market's going to be right or the Federal Reserve is going to be right, but not both can be right at the same time, because on one hand, you've got the Fed telling us pretty much, in the FOMC meetings that they're not cutting rates this year, and the market's pricing it at least 2, if not 3 cuts this year, and not to mention the 6 cuts in 2024. You can kind of see the bull and bear case really right now. They're in a nutshell as far as resilient economy with stronger than expected corporate earnings versus very hot, very restrictive monetary policy from the Fed. Now, this right here was from Chris Watling, a chief executive financial advisor from Longview Economics, mentioning that a recession is coming and stock markets won't come through it unscathed. So alongside this warning signal, Watling said the typical timeline for a recession after the inversion of the Treasury yield curve, which first inverted in March 2020, then again in the following months, was roughly 1 year or so. And every time you've had this in the US, you've had a recession. So I think it's coming, it's on the way. It's just a timing issue. And while many economists have warned for a looming recession, the International Monetary Fund, so IMF, suggested only last week that it had been surprised by the recent strength of the US labor market and consumer spending as well. And there is a lot of discrepancy, right? I mean, this is one of the most anticipated, most expected recessions right now, if it, of course, ends up happening. But at the same time, you've got a very resilient, very strong US economy with the labor market being super tight, and at the same time, consumer spending also coming in, I would say, pretty well considering all things here. So earnings expectations, way too optimistic. So as on Friday, whether equity markets could come through an expected economic downturn relatively unscathed, Watling replied, "I mean, they won't come through it unscathed in our opinion. I'm not even sure about relatively. The reality is, if you look at profit margins, they went to record highs in 2021 and a bit of 2022. And of course, when you have a lot of inflation around, you can get very good at operating leverage, so you can get record high profit margins. When you get into recessions, we've got to do a double hit on profit margins, and you've got to normalize them back to normal levels. And then when you've got to price in a recession. So I think the expectations for earnings are way too optimistic, and therefore the stock market will have to contend with that at some point. So again, that's one of the things that we've talked about in our previous videos, where there is earnings declining on a year-over-year basis. Profit margins are coming down. But at the same time, these companies are doing a lot of layoffs and share buybacks, right? Those two things can really help these earnings per share, the bottom line, stay relatively higher, because they are reducing their costs at the same time. Even though profit margins may be coming down, even though revenues might be struggling a little bit, they're still cutting off so many employees, which obviously is one of the biggest expense for any company. And thereby margins somewhat relatively staying a lot better than what many people anticipated. So nonetheless, Amazon had a very strong move after announcing another round of layoffs. Procter & Gamble pushing higher on earnings. Eli Lilly hitting a new all-time high at 2.78% up. Apple was slightly down, Microsoft slightly down, NVIDIA flat, AMD was pulling back, Google was slightly up, Meta was slightly down. So it was a very, very mixed day as what we have already seen for the most of April. And again, you can see some sectors pushing higher, some sectors pushing lower. In the last 1 week, again, a very, very mixed day with materials, energy, comm services really struggling, with defensive, real estate, industrial, healthcare all pushing higher. And over the last 1 month, we've got all 11 sectors in the S&P 500 green at the moment. So all of them are pushing higher, with platinum, lean hogs, canola, rough rice pushing up, and a lot of other commodities or pretty much a lot of other metals and materials and agriculture selling off. Corn, lumber prices, soybeans and natural gas, coffee, gold, all of them selling off. And Bitcoin now once again under 28,000, Ethereum just a little bit under 1900. So we are seeing a bit of a risk-off environment in the market, and this is really the overall technical for QQQs. This is the entire month of April. Since the beginning of April, all we have really seen is the market trade sideways. This right here is the range within which QQQs have continued to trade. I mean, you can literally see that in front of you, right? We haven't really gone up. We haven't really gone down. We have just traded sideways. And why now? Why exactly now? I mean, you can see that in the past, a very strong rally, right? We were consistently moving up. We were making higher highs and higher lows. This right here was a consistent downtrend. So downtrend, uptrend, and now we're just seeing a very much of a sideways consolidation for the market. So the reason is very simple. We have been hitting up to that wall of that resistance, that bear camp, as we talked about in our previous videos. So the same is true for S&P 500. You can see just a lot of consolidation in that range. So this right here can be labeled as the box since March 23rd, right? So this right here is where we have just been trading sideways for S&P 500. So lots of consolidation in that range, with a resistance staying all the way up to 4169, 4170, and a support level right here sitting roughly at 4060. So that about 100-point range where S&P is just kind of fluctuating in between of. Talking a little bit about volatility, once again coming down a little bit over 2.3%, so back under 17 levels. Keep a close eye on this because VIX at these low levels can be quite unpredictable, and it's not going to be a surprise if it does start to push higher once again, considering how low it already is. US oil prices once again getting a bit of a boost, up over 1% on the day, back almost at $78 per barrel. And we got Ethereum obviously selling off, so a little bit of a risk-off environment. Support level is going to stay put at 1738, with Bitcoin also selling off pretty aggressively. Next support is going to stay down to 25,000. So this right here is going to be that level to watch, and we are pretty aggressively selling off here on the day. Talking a little bit about the 10-year yields, we are seeing a bit of a move back up. So again, it has been pushing higher since April 6th, but the markets have also traded sideways. So we haven't really seen that correlation play out. As the yields go up, markets come down. We have seen that for the most part in 2022 and even 2023, but now since April, that correlation really started to break apart, and right now we're still seeing a little bit of momentum. 3.57% is where it's trading at the moment. Now, talking about S&P 500, consolidation sideways. I mean, another doji candle. There's not really much for us to go over other than the fact that we're still inside this red rectangle, kind of trading inside this bear camp, and we're just waiting on orders from the market, right? Really, it's all about direction here. It's a tradable, right? It's an intraday tradable momentum. So again, if you come over to QQQs, I've already pointed out some of the levels to watch for all the members on an intraday basis in our private live stream. So again, if you want to get access to that, link's going to be down below. And I'm literally just going to be going over trade ideas both on a swing basis and on a day basis. And this right here has been part of our watch list, where QQQs, every time they come down to certain levels of support, there is opportunity on TQQQ on the long side, and if they actually do end up hitting some resistance levels, there's going to be opportunities on SQQQs. So those are some levels to definitely be watching for QQQs if you are looking to trade intraday. But again, S&P in that resistance zone. Same with the Nasdaq. We're getting a validation of that 21 EMA, but lots of consolidation in that range. And once again, we're kind of tapping out at this bear camp. So next week is going to be very important for us to continue to monitor how we trade and whether we get a breakout or if we get a rejection to continue and some more momentum to the downside. Talking about Apple, and Apple here getting a little bit of a pullback, down almost 1%. So support is going to be down to 157, 158. So this right here is going to be that level to watch, and a resistance all the way up to 177 for Apple. So those right there are going to be some levels to watch for the company. It is still a little bit on the overextended side, even on the weekly time frame. We are definitely getting a bit stretched, not exactly overbought, but 62 RSI is about as close to as it can get for Apple being overbought. The last time it got up to that level was back in August at around 61, 62, and then of course it ended up selling off about 27, 28%. So I'm definitely cautious here. I'm not going crazy on Apple stock buying or just trading or anything like that, but support level is going to stay put at 158 all the way down to as low as 122 for this stock. Amazon getting a little bit of a breakout, so big breakout on Amazon here. Not only is it breaking out above this lower high, which again is a big accomplishment of its own, but this right here is another previous resistance or a horizontal resistance where it's also now starting to break to the upside on this announcement of layoffs. Volume was pretty high, so 86 million shares traded versus 55 million. So it's possible, in my opinion, that we do see a little bit of a move back up to as much as 114, 115. So this right here is going to be that level to watch as a resistance for Amazon moving forward. Talking a little bit about Tesla. And Tesla here getting some buyers to step in, up over 1.2%. But this right here is actually going to now turn into a resistance for Tesla. So we did see a pretty significant gap down, a selling pressure yesterday, almost 10%. And today it's a little bit of a knee-jerk reaction to go back higher to see what's up there for us. But this right here, 165 to as much as 175, that $10 range is now going to start acting as a resistance for Tesla. We've got some gaps to fill on the downside, all the way down to as low as support at 130, in line with what my current fair value also is on Tesla. Talking about NVIDIA still getting validated at that 21 EMA. I mean, it's just absolutely incredible how much support there really is for NVIDIA. I mean, the sentiment, the momentum, everything lines up for the stock. You can see the perfect 21 EMA, the white line. It came down to 267.46. That's the EMA, and it came down to 267.22. And the buyers stepped right back in. So flat on the day, trading it past 271. And, resistance is going to stay put as high as $280. There's pretty big supply there for NVIDIA. The big sellers sitting right there. And of course, if we do see a breakdown below 267, would be surprised to see lower lows or further flush down lower for NVIDIA. AMD is doing its part, so it is coming down almost 2% down on the day. Next support really is going to be $78, $79, as we have discussed in our previous videos. So this right here is going to be that level to watch for advanced micro devices. Talking a little bit about PayPal. And PayPal here on the day, just flat, up over 82 basis points. This is a really, really uneventful market sentiment, right? Market price action, just all we're really doing is just trading sideways. Same with PayPal, not really going anywhere. Resistance is going to stay put all the way up to $75, $76, and support level is going to stay put at $67 per share for PayPal. So that right there is a lot of consolidation, and that's really where we're trading at the moment. Talking about Square, pushing higher, 1.8%, so seeing some buyers to step in. We've got a support sitting roughly at $59, still trading inside this downtrending channel of lower highs and lower lows. But of course, resistance all the way up to as much as $70 to as much as $83, $89. So that right there are going to be some levels to also pay attention to for Square moving forward. Talking a little bit about Meta now, and Meta here once again getting bought up. So intraday, green candle, but a red day. Resistance going to stay put at $222. Support level at roughly around 198. So those right there are going to be some levels to pay attention to. And right now we're just consolidating sideways. And the volume's been dropping off a little bit, but they are reporting earnings next week on Wednesday, April 26th. So that's going to give us a lot more insight, a lot more to think about for Meta's numbers, and of course the valuation. Netflix getting a push back higher. It is still inside the symmetrical triangle, so very much of a lower highs and higher lows, so consolidating sideways in that symmetrical triangle. Resistance is going to stay at roughly 330, 339, so that's going to be a level to watch, and support levels sitting roughly $305, $306 per share for Netflix moving forward. Talking about Google, sideways consolidation, about as flat as it can be, only up 1 basis point, and resistance is going to stay put at 109, support at 101. My fair value and my intrinsic value obviously a lot lower than where it's trading right now, but I do still feel optimistic about Google's future in advertising, search, and all the other segments that they are part of. So lots of consolidation. Resistance is going to stay put at 109 for this company. Microsoft, still validating that 21 EMA, very similar to NVIDIA, right? I feel like NVIDIA and Microsoft, if they start to crack below their 21 exponential moving average, it's possible that we do see some more momentum lower for these companies, but buyers are stepping in. I mean, you can see the low for the day, $283, 21 EMA is sitting at 282.98, so we are off by like 5 or 8 cents on that 21 EMA. So again, buyers are present for NVIDIA and Microsoft at those levels because the momentum, the sentiment around AI is so strong. Next up, we've got Shopify, and that's the last one. So Shopify here pushing higher, almost 2%. So a little bit of an outperformance on the day compared to other stocks, compared to the broader markets. Resistance $54, support at 41. So we're like right in the middle. And again, there's about an equal reward. There's an equal risk versus equal reward here for Shopify. So right now, just no trades on this, no fundamentals, or long-term, analysis on this, because again, it's not as profitable as what it could be. So hope you guys enjoyed this video and a complete update. The markets here obviously are trading sideways for quite some time. Literally since the beginning of April, we've just traded sideways and we're consolidating. So this is also a good opportunity to either learn how to trade options or learn how to day trade, because it's really going to come in handy. Again, if you want to access all the buy and sell alerts, options alerts, trade ideas, and the private videos and all the other member benefits, link's going to be down below for our Patreon and our Discord. There is a 16% annual discount that does expire at the end of this month. As always, happy investing. I'll see you all in the next video.